Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are on Friday, 18th of November. And I was giving during the Asian Session Live Market Analysis and the Forecast webinar on 14th of November, the expected market moves and also the market trading and the trading techniques. And now we are going to review the market on Friday, 18th of November between 5 and 5:30 GMT. How exactly the market has reacted during this particular week. So straight away I'll go to the forecast page. Now the players were expected to make the firm up move and the slide alternatively, and they were expected to gain the levels or rise on Wednesday and Thursdays, 16th and 17th, but they did not rise. And instead of making a dip on 18th, that is today, during that of the Japanese session, they made the drop during that of the late US session on Thursday, yesterday, and now they are simply holding and slowly making the firming up move. And they are expected to make the rise during that of the European session, and again they are expected to make the slide during the US session. And so people might be wondering why such US dollar gaining moves are happening in the market. Even though there were limited US dollar gaining move expected by that of the forecast, but they had done an extended move of US dollar gaining. And later on, I was able to find the probable reason that in US, predominant of the traders close their positions and go for Thanksgiving holidays. So probably they might be holding pretty long positions in other majors. So as a result, the players wanted to just get the profit when such traders liquidate the long positions in distress. That is what happening in the market now. So they could just induce such traders to liquidate the long positions and then try to gain the levels very quickly. And also this is the week wherein they go in for a lot of negotiations with the newly elected people, and there they need to have some sort of understanding before making further rigging of the market. So in that process, again, they will try to bring down the market, not only the Forex, but other markets as well. And that is mainly to accumulate the buy positions after that of the successful negotiations. Then they will try to gain the levels in the name of year-end move and then try to book profit during the early part of the new year. So they are expected to make that yearly trend reversal moves from next month. And before that, they are trying to make the move as one-sided slide or the US dollar gaining move, mainly to induce the long holders to liquidate before going for the Thanksgiving. So again, they are expected to gain the levels during that of the Japanese and the European session, and some more drop could be seen during that of the US session. So trade carefully and try to use the hedging to limit the risk. And next week, they are expected to make the swing and quick rise moves, and probably once the people go for Thanksgiving and the volume comes down, in a thin volume condition, the players are expected to use different stories and gain the levels in the case of other majors and say that they have discounted all the informations what they have been telling so far as the causal factor for the market moves. Now coming to the levels in which the currencies are expected to swing, actually from 1.08 they were expected to gain the levels to that of the earlier 1.13, but they extended it another 200 pips on the downside. 225 or so pips on the downside from that of the calculated level. Actually, this sort of extensions do happen in the market whenever there is distress liquidation. When the traders are not liquidating the long positions, they drop another 100 pips and hold. So that automatically when the loss increases, the traders liquidate the long positions out of fear. And when they see that the free margin is getting eroded, they automatically think that there is no point in holding it. There is no hope that the market might recover. But we have to keep it in mind that market means swings. They cannot continuously drop euro and GBP to up to zero level. They have to necessarily gain back the levels. We know very well they bring in a lot of volatility in the market, and still during that of the drop, we find that it is very difficult to catch the falling knife. So normally such phrases will be used in the market. So as a result, you'll find that the market might go in for a free fall, and the players are very smart. And when such free falls are happening in the market, one will be wondering who is buying at the lowest level, because there could be further drop. That is what the analysts say. And the players silently keep small orders and accumulate all the sells at the lowest levels of the traders. Thereby, at the cheapest level, they are able to accumulate the positions. And later on, they start buying at a higher level so that the average will be still lesser than that of the market. And quickly, they make spikes 1 or 2 times and totally go to that of the new trading zone. So you find that lower level consolidation with extended stop and mainly to shift the trading zone to the other higher levels. So keep in mind that we have to use in such a scenario the hedge order to limit the risk. And if they are making a downside move, we can book profit in the hedge. And once they start gaining the level, we can trail the hedge order upward, so that if they make another downward stop, and we can book profit again and trail the hedge order upward. This way, if we do it 2-3 times, we will be able to earn the profit, and that will safeguard our usable free margin. So always keep in mind, only with the help of the trading strategy, effective trading strategy, we can consistently earn from the market irrespective of the market moves. In the case of GBP, they came down to 1.2382 and then come to 1.24, not much of a downward move. Only in the case of Euro, they just made about 200 pips downward move. Besides, in the case of Yen, they just did not make a downward move, instead gained the levels. So GBP, they have just left it with narrow range swing, but this time they had taken Euro as well as USD Yen. Probably predominant of the traders might be holding the positions in those two currencies. That is why they had done the extreme moves in the case of USD Yen on the upside to 110.78 and then started making the slide. So they do this sort of extended stop and move and then reverse the market. So keep in mind, quick moves are false moves in the market, and they purposely do it in order to create fear to that of the traders. Then in the case of CHF, they just came down to 98.84. Instead of further downward move, they straight away made a gain about 100 pips on the upside, in tandem with it of Euro 200 pips drop. Then in the case of USD CAD, the high was all right, but the low, they did not come down much. They came down only to 1.34, and they are holding it in a narrow range of 150 pips. And in the case of Australian dollar, again, similar to Euro, they made another 150 pips on the downside, and the upside they did not gain. So here you come across that Euro, USD, Yen, and Australian dollar, they made some extended stop ends. And extended stop end in the sense they continuously drop for another 150-200 pips and then reverse the market in the same day. And that too, today being the weekend, they just shown the new psychological level 1.05 area, and that would have really given the fear to the traders that probably Europe would breach the parity and go below. So that is the way they just create the situation. And you know that in the case of GBP, they created such a situation. And now it is a turn of euro. So wherever the traders holding predominant of the long positions, the players make such moves. And probably you might come across many unfavorable news from Europe. But when they decide to rise the market, you will find they will simply discount all such information and start gaining the levels in the case of euro and say that US dollar is not, or the US is not going to increase the interest rate or whatever it is. They try to give some attribute and push euro on the upside. So we'll be seeing it very soon. So don't be disgusted or don't lose your patience. And this is the trick of the trade of the players. So they create such extreme moves and induce the traders to become afraid, so that the traders make distress trades and the players happily accumulate the positions. Hence, I always recommend it is not the forecast which is going to earn money for the traders. Ultimately, the trading strategy is vital. Now coming to that of the initial lows and the highs set for today, 1.0582 is the low they are set during start of the day, which is not being breached. The high is 1.0629, and that is also not breached. They are holding it in between. And in the case of GBP, 1.2385 is the low, 1.2421 is the high, and they are holding it in the middle level. What is shown here is yesterday's 1.25, and that is not being changed. And in the case of yen, 109.98 is the low, and 110.60 was the high, and they just breached the high and went up to 110.78, and then subsequently they come down. So with a brief upward sharpened. And in the case of CHF, 1.0068 is the low, 1.0105 is the high. So it has come to that of the parity level. And again, they are expected to make a slide in the case of USD CHF. And they are not expected to sustain at a higher level. In the case of Canadian dollar, 1.3517 is the low. 1.3559 is the high. They just breached the high, went up to 1.3565 and came down below that of 1.3559 after a brief upward stop, and they're expected to make the slide again. And the case of Australian dollar, 73.87 was the initial low, and they just breached 73.79, and then 74.19 is the high that is not being breached. So here again, they just made a brief downward stop and gained the level. So it indicates that wherever there is close by stops, they just made an attempt to hit the stops. Otherwise, they are not making big moves. Slowly, they will try to gain the levels in the case of the Euro and GBP during the European session, and that gained the level they could lose during that of the US session, in order to induce all the long holders to just liquidate the long positions before going to the Thanksgiving. Now the recommended trades for today, we can take a buy near that of the low what they are set and try to aim for about a brief upward stop and above that of the high. At that time we can book profit. And similarly in the case of GBP, near that of the low we can take a buy, and when they gain the level nominally during that of the European session we can book profit. And also in the case of Australian dollar, when they make a dip closer to low, you can take a buy and book profit during small gain and upward stop and above that of the high during the European session. These are all the recommended trades for today. And USDN is, you can take a sell position when they are not breached the high, and that you try to do it during that of the US session, so that they will quickly drop USDN in order to create the sentiment. But they will make the small slide and sideways move in the case of GBP, Euro and GBP, and thereby they will be able to bring down the yen crosses. And you know that they have started the sequential moves, and if you see that they completed their big moves in the case of the commodity and commodity crosses, and now they are making subdued moves. And then in the case of yen and yen crosses, they are just handling it. And yen, after handling yen, they will come to that of the majors, making big moves on the upside. And before that, they gained the levels in the case of yen. And once Euro and GBP gain more level, then afterwards, after making upward stop, and in the case of yen crosses, they will start making the slide in the case of USD yen. So watch for such sequential move. Then finally, they will go in for the European crosses. For that, they will gain more either in the case of Euro or in the case of GBP in order to handle Euro GBP cross, which has got more quick value. Now, these are all the session timings of the day. So if you got any doubt, kindly ask me the questions in the question answer window. I'll be willing to answer the questions. Then I'll come back on Monday and give you the forecast for the next week. So any question, kindly ask me. I'll be glad to answer the questions. Okay, Trainer's got a question. When you see the intentional move happening, should you wait until after the next gap time to W a position? Yes, once the intentional move happens, you have to look into that of the net change. Once they go in for the 150 pips negative net change, then you can add another position, and the timing will be the start of the third session. So when they start, say for example, intentional move from that of the Japanese session and the European session, 2 sessions get over, then the gap time, then the start of the US session. During that of the early part of the US session, between 14:30 to 16 GMT, they'll make one extended downward stop and quickly and reverse the market. At that time, you can buy the second buy and close both the buys above the average. That way, you will be able to quickly exit even when they are making intentional move on the downside. So, as I explained, that they don't make hat tricks. That means they don't consistently rise or consistently drop for more than 2 sessions. Similarly, more than 2 days and more than 2 months. Okay, the next gap time to double your position, or should you double down? No, double down after the drop is very dangerous. Taking the double the quantity of sell will make you to lose miserably, because they are expected to reverse very quickly during that of the third move, because their move will be very quick, and it might appear that we can double down and quickly earn back the last money, but the platforms will not fill your orders, because they use specific type of orders, and that order will try to fill only the stops and not the limit orders. So keep that in mind. So they have a lot of tricks against the traders. So it is not theoretically as you think. Also, how do you track the New Zealand crosses using the majors? See, you have to understand the behavior of Australian dollar and New Zealand dollar. See, Australian dollar and New Zealand dollar are expected to move in tandem. But in order to bring in the oscillation in the case of Aussie New Zealand dollar cross, they bring in variable volatile moves. Sometimes they gain the levels in the case of Australian dollar, at that time they drop New Zealand dollar. Sometimes they gain the levels in the case of New Zealand dollar and drop Australian dollar. That way they bring in the variation or volatility in the case of Aussie New Zealand dollar cross. Also, You find the New Zealand dollar cross and Australian dollar cross, they are relatively having lesser volume. It is easy to manipulate them. And so they make a very quick move in such currencies where the volume is very thin. Automatically, when you have to go in for a short covering or long liquidation, there will be distress moves in the market. So keep them in mind. If you want to track them carefully, we need to follow the majors, Australian dollar and New Zealand dollar. And if you want to trade with regard to euro, New Zealand dollar cross, then you have to watch euro and the New Zealand dollar and see whether they are making tandem move or the opposite move. Say, now let me just show you one example. Now euro is showing negative net change of 22 pips. Then New Zealand dollar is showing a negative net change of 15 pips. When both are showing negative net change as being the numerator, so automatically euro New Zealand dollar cross will show only a nominal move, not a big move, because both are negative. But when they make contrarian move, then understand they are handling such crosses. At that time, if you enter into the cross, we'll be able to make quick profit. So that is how we have to look into that. That is why I always say that you just keep the live market code page and parallelly compare all the currencies. Then you will be able to understand what currency they are handling at a given time. Then ABI, USDN, what is the expected high now? So USDN expected high was actually around 109.78. From there, they just gained another 100 pips. So this could be the final upward stop and before making the downward move. You could come across a very quick downward move in the case of USDN during that of the US session. That will give surprise to traders when euro and GBP are making sideways on the downward move. USDN is also making a downward move because they have to handle the yen crosses for that they will make such moves. Any other question, please? I'll show the forecast slide again. So they are expected to make the volatile moves, upside move and the downside move in the European and the US sessions. In the case of euro and GBP, at the time you could come across USDN also making the slide. So no more question is coming forward. So let me conclude the webinar. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. Kindly keep in mind that the players are known to make such extreme moves from time to time. So if you use the hedging order, then automatically we will be limiting the risk. We will not take unlimited risk. And the only thing is, it might test our patience when they make one-sided move. But if you use hedging and calmly wait, and in case if you are not able to understand how far they are going to make moves, etc., can simply keep stop at entry in the hedge and watch carefully. They will hit the stop at entry and reverse the market. At that time, you can keep another hedge order and trail in your favor. As a result, you will be able to earn on either way moves of the market. So please understand, market is tradable. It is not that it does not give a trading opportunity. Always quick moves are false moves. So such quick moves, they make it during start and the late session close time. only to add fuel to that of the fear to the traders so that they go in for a distress of loading of the positions or short covering. So just to trigger the fear and make the traders emotional, they make such quick moves. And invariably, during such quick moves, they use a specific type of order which will only hit the stops and it will not really make lowest level sell or the highest level buy. So if you understand how the players manipulate the market, then you will not have the fear. And especially when the players have invested all their money into this system, into the markets, and nowhere else they can keep the money because nowhere else the money multiplies. If they give it to the bank and ask them to keep it in the form of fixed deposit, they will say you have to pay for it. But if they just deploy it at that market and then it makes huge profit, the bank helping hand or the private arm of the bank help them to manipulate and earn more money out of such huge accumulated reserve. So that is why you find such wealthier become more wealthier and they are trying to compete among themselves and say that they are world number one, world number two, etc. And they can say so much and they can say that they have billions and billions and billions of dollars, but they cannot eat them. They can only eat what they are destined. So keep in mind that such manipulations is bound to happen in the market and we have to sustain it with the help of our trading strategy. There is no point in blaming them and try to earn using your intelligence. And to avoid all confusions, the best solution will be only take one position at a time and close the position, afterwards commit another position so that you will consistently earn money from that other market. Wish you all happy weekend and happy trading, and see that you will come across the reversal of the market happening very soon. Wish you all the best.